Hey folks, welcome back to the channel. It's Liquid here, and recently I put out a poll on the community tab on my channel asking which index should I try to beat in 2023 using options. And most people have chosen the S&P 500, which are 500 of the largest publicly traded companies in the US, as a target I should try to beat. So I have decided to do that this year, and I'm going to be using the Spider S&P 500 ETF, which is a fund that basically tracks the S&P 500 index. The ticker is SPY. It's one of the most liquid and popular ETFs on the market, and it has a really robust options chain, so I can easily take advantage of different strategies. Now, the way I'm going to be doing this is very similar to my Alphabet Options Challenge. And if you've been following there, I've basically update once a week what I'm doing and showing a weekly progress. The difference with this one though is I will be placing my trades throughout the week, and then I will put out a video at the end of the week, like right now, usually on a Friday, maybe a Saturday, to summarize the trades that I've done for the week. And unlike the Google challenge, this one I actually have a benchmark that I can compare myself against. Now, in terms of which strategies I'll be using, most of the inspiration comes from this Reddit thread in the options subreddit. And the basic idea is to sell out of the money credit spreads on the SPY. So if it's a Monday, then I will sell a spread. It could be a put spread, it could be a call spread. It just depends on the market movement at the time. And I will sell the spread that will expire on Wednesday. And then on Wednesday, I'll either buy back that spread or I'll just let it expire if it's going to expire worthless. And I will put on a trade for Friday. And then on Friday, I'm going to put on a trade expiring on the next Monday, etc. Now, sometimes if I have time during the middle of the week, depending on what the market is doing, I might put in a trade on a Tuesday that is expiring on a Wednesday, or maybe I'll even do 0 DTE trades, let's say next Thursday on the 12th. If I see a predictable pattern for the SPY, like it's just sort of heading up without too much volatility, then I might trade an option on that day, expiring also on that day on the 12th. So I'm going to put a link to this thread in the video description below. So if you want to take a closer look at it, you can see what the strategy entails. And then also there are other people commenting down below to give their opinions and mention tips on how to improve the strategy. But basically, this is what I'm doing. I'm going to change it a little bit because instead of just using put spreads and call spreads, I will also be using ratio spreads. If you expect the market, for example, to move up, but you also want to protect your downside. And if the market does go down a little bit, you actually make more money than if the market goes up. So it's used for specific situations, but the risk to reward can be quite favorable for that. So I'll have a separate video explaining ratio spreads and how to do them in the future. But for now, I will be trading SPY options using theta decay mostly. So I'll be selling spreads, and this strategy calls for a 15 delta, but I'm going to go a little more conservative and choose, usually my deltas are going to be between 5 and 10, and instead of a $1 width, I might choose like a $2 or $3 width. So let's take a look at some trades that I'm making this week. For example, today is Thursday, so there's one more trading day remaining for the week. If I look at my current account, you can see I have these SPY spreads that I put in earlier this week. And two of these are about to expire, which are bull put spreads at 373 and 375, which means as long as SPY ends the day higher than 375, then this would make money, and this one as well. So if I look at what the SPY is currently doing, it's at 379. So it's probably going to end above 375. So that's why my unrealized profit and loss here would be positive. And then the market value, right now it's at 0. There's only like 4 minutes left for the trading session. So because these are going to expire, I'm going to put in a new trade that will expire tomorrow. So if I take a look at what the SPY is doing, this is a daily chart. So overall, larger picture, the stock market is going down. But if I zoom in here, we can see each bar here. So over the last like 1 week or so, there's been like a slight uptrend. So I drew this channel over here. Most likely SPY is going to finish the week somewhere within this channel because it's not likely to break out of it. Here's the EMA, this blue line here. So if it's bullish tomorrow, it probably ends somewhere around up here. And if it's bearish, we may break through the bottom of this, but not by too much. So I'm going to look at the option chain and go to the SPY So January 6th, this would be tomorrow. If I go up here to 370, you can see I can make some premiums here. So I'll maybe sell well, first I have to make sure I don't have any conflicting strike prices. My SPY for January 6th, so I have a 372, 375. This is a ratio spread, and then I have a bear call, which is not going to be anywhere near to what I am selling for my put spread. So for my bull put spread, 370, I'm going to sell that, and I'm going to buy maybe the 368, and this will just expire tomorrow. And I'll try to get 11 cents, and I'll put in maybe 3. I don't feel that confident, but yeah, there we go. So that one's in.
Order partially filled. Order filled.
Okay, so that one just filled. So we have a new SPY bull put at 370 and 368. So hopefully by tomorrow, SPY ends the day above 370. Let's go over there right now and see what happens. Hey everyone, today is Friday, January 6th, so it's the end of the first week, and it looks like SPY is going to finish within this bull channel, or maybe even peak above it, so that's good because I wanted the SPY to close the week above 370, which looks like it is, which means for the option spread I traded yesterday, 370, 368, bull put, it's going to expire worthless, and it looks like I'm going to make about $29 after today. In fact, I have 3 SPY put options all expiring today. So I'm going to put on maybe a couple more trades. There's about 75 minutes left in the day. So again, the strategy is to just use spreads, either put spreads or call spreads, depending on the market structure, and have those 1 or 2 or 3 days to expiration. The initial capital I will use for this will be $30,000 US, and I'll keep everything in US dollars just to simplify all the numbers. So the idea is by using this $30,000 as the capital to trade my options, I'm going to have a better result than just to put this $30,000 in the SPY and let it ride without touching it for the rest of the year. Looking at the daily chart, the SPY is once again above its 21 EMA, so likely it's going to move higher into next week. In the medium term, I think the S&P 500 is still on a downward trend because it tried to go above the top of this large bear channel and it failed to go higher after breaking out of it a couple of times. So we're most likely going to continue downwards. However, in the short term, like in the next 1 or 2 days, like I mentioned, this is a pretty bullish sign. Now, it's going to depend on what the stock market does after this point because this is the top of this bull channel. So if it gets rejected from the top, then we'll probably go down to, if I extend this out, it's probably going to come back down and retest the bottom of this channel. However, if it breaks out, then there's a good chance that we could see it double the range of this channel or go back up to the top of the larger bear channel. So at least for the next couple of days, this is sort of the range or expected value, I guess. So I'm slightly bullish for next week. So I might sell a bull put spread somewhere down here below where this arrow is ending. And depending on the premiums, I might sell a bear call up here. It'll have to be over 400, so I'm not sure what the premiums will be there. But let's take a look at the option chain. This is for SPY, and I'm going to choose, let's look at Monday's expiration first, which is January 9th. So that's 3 days from now. That's going to take the weekend basically. So down here, I have my line set at 378. And that's because I think that's a pretty safe area. It's where on the first trading day of the year, it touched that 178 line, and it basically just kept going up from there. I don't think there's any major news coming out on Monday. Let's see the calendar here. For Monday, January 9th, we have some inflation expectations from the New York Fed coming out, some Fed speak, and that's pretty much it. So not a lot going on. I don't expect there to be a big movement. So 378, that gives us a 2.4 standard deviation. I'm going to sell this one and maybe buy the 375. That's only a credit of $4. Maybe I'll sell the 380 and buy the 378. $6 spread. For the call option, I don't think I'm going to be doing anything there because there are a lot of gaps here and it's very easy for the stock to just go all the way up to like 399 or 400. But from the option chain, you can see I'm not going to make any money there with those option prices. And it's much easier to go from here to 399 because there wasn't a lot of supply from previous here. So it's basically forming this U shape. If I hide the drawings for a moment, you can sort of see this. It's sort of like a hook shape right now, but it can easily go all the way up and make a U shape, right? Because that's happened before. As you can see here, it came down and went up very quickly there. Also over here, came down fast and also goes up fast as well. Over here as well, whenever you see like gaps like this, it's very easy for the stock to just move up and try to fill that gap. So I'm not confident in any bear calls this time. I don't think it's worth the risk. I'm going to move on to January 10th, 4 days away. I'll probably sell another put spread. Let's see what the options are like. So the bottom over here over the last couple of weeks, the support marked by this December 28th red bar is about 376. And it looks like that's a pretty good support level that I want to try and see if I can sell that strike price to get some premiums. So that's 14. That's not bad, and it's 2 standard deviations. You can tell by the lightly shaded blue color. So if I sell this and buy this one, I'm not too confident with this one because it is further away. So I'm going to set the number of spreads to 3, and I'll try to get $4 for this. Okay, let's lower this to 5.
Order filled.
Okay, it looks like both of those got filled. One at 4 cents, one at 5 cents. Okay, so these are those new trades over here. So right now they're negative because the average price here factors in the cost or the commissions. So currently I am having an unrealized loss, but as time goes on, these should be more positive. Now there is a chance that after a large update like this, the next day is going to be red. So we could see something on Monday where SPY comes down and hits around 383, basically where it started today before going all the way up. Because when there's a large green day, it's often followed by a red day, especially when the move is so strong and there's really no big news coming out the next day. So most likely SPY for Monday is going to end either at 388 or higher, or it's going to fall back within this range. But even if it comes back into this range, I don't think it'll fall too much because you can see in the past, it takes at least a couple of days or 3 days for the SPY to bounce from one side of the range to the other, from top to bottom to top again to bottom. And in this case, it's rare to see just a 1-day push, like a 10-point move in a single day. SPY went from 179 to right now it's at 189. So you don't see a 10-point move like this very often. And because I don't believe there's a big chance that SPY is going to end below 383, what I'll do is set a line here and sell a ratio spread around 383. And what that's going to look like is something like this. 383 is here. Okay, 384 might be better because it's a delta of roughly 15 and it's just over 1 standard deviation. So I'm going to start here and buy this put option, and then I'm going to sell the 383, and I'm going to change the number of options I want to sell for the 383 strike to 2. So this is a 1-to-2 ratio. Try to get, see if I can get 16 for this. If not, I'll go to 15.
Order filled.
Okay, so hopefully SPY ends above 383 on Monday. So yeah, now I'm going to share the trades I've done for this week and the overall profit loss that I've made. Okay, so it's almost at the end of the day now. These are all the trades I put in for SPY this week. Most of these have expired already, but of course the new ones that I put in today, which are 3 separate spreads. So all of those will expire next week, but most of these from earlier this week have expired either earlier this week or are expiring today. So the way I'm going to calculate my total profit and loss is basically take the net income that I've collected, the net premiums over the entire week, which means I'm not going to wait until the options expire before calculating the final profit and loss. But what I'll do is if I have to close any options, or if I even get the SPY assigned to me for 100 shares, then I will calculate that loss into my weekly earnings when I take that loss. So my weekly net earnings will basically be like a net cash flow of my account. So out of all the trading done this week, I've made $148 after commissions. And with a starting capital of $30,000, that's about 0.49% return. So that's not too bad. If I'm able to get 0.49% a week, and there's 52 weeks in a year, that's a 25% return. Now there's just a few minutes remaining of trading left for the week, and it looks like the SPY is going to end the day pretty high today at a 2.25%. So all of the gains this week just happened today because the rest of the week, the SPY didn't really do anything. So it's Tuesday, it went down, and then Wednesday, Thursday also went down, and then huge pop up today. But it did not finish at the highs. You can see here it got rejected from the very top there at 389. It's still going to finish above the EMA, so that's good. That's going to be bullish for next week, and I have some puts in here for next week, so I think I'm set up okay for that. But yeah, so the first week I am underperforming the SPY, but let's continue on and see what happens. I'm looking forward to giving more updates and continuing to trade this until the end of the year. So follow along if you want to see how I progress through this, and I'll be sharing my trades at the end of every week. Thanks a lot for watching, and I'll talk to you in the next one.